All right, so welcome everyone to another deep dive. Today, we're going to be looking into the psychology of crypto trading.
Sounds exciting.
Yeah, it should be interesting for
Yeah.
sure. I think a lot of people, when they come to crypto trading, they just kind of focus on like the
I
numbers,
don't know.
the charts, the graphs.
Yeah, technical analysis and all that.
Right, exactly. And they forget about
Mm,
kind of the human element of it all.
absolutely.
And so for this deep dive, we're going to be looking at 1.txt, and we're going to be talking all about the psychology. What makes a crypto trader tick? What are the kind of traps that they fall into?
The mental side of it.
Exactly, yeah. And how can they overcome these things and become better traders?
I think that's super important because, you can have all the technical skills in the world, but if your mind isn't right,
Yeah,
you're gonna
you're going to make mistakes.
you're gonna make mistakes. You're gonna self-sabotage.
And I think we've all been there, whether you've been trading for a long time or you're just starting out. We've all kind of made those mistakes where we let our emotions get the better of us.
Oh yeah, for sure.
So let's get into it. I think one of the biggest things that we see with new traders especially is like this fear of missing out, right? The FOMO.
Oh, huge.
So can you talk a little bit about like what that is and how that can affect people's trading decisions?
Yeah, absolutely. So FOMO, right? Fear of missing out. It's this like primal urge that we have as humans. Like we don't want to be left behind.
Right.
We want to be part of the group. And so, in the crypto world, it manifests as like you see everyone talking about this new coin, right?
Yeah, you're scrolling through Twitter, you're on
Yeah,
Discord.
exactly. And everyone's like, oh my God, this is going to go to the moon. This is the next Bitcoin.
You're like, I got to get in on this.
Yeah, you feel like you're going to miss out on this like massive opportunity.
Right.
If you don't buy right now, and so what happens is people just like throw all caution to the wind and they just buy without doing any
Oh, we're
research.
not thinking about it.
Yeah, they don't even know what they're buying half the time.
And then, they buy at the top and then the market crashes.
Exactly. And then they lose a ton of money and they're like, oh my God, I should have just waited. I should have done my research.
So how can people kind of overcome this FOMO? How can they avoid falling into this trap?
So I think one of the best things that people can do is have a plan, like a trading plan, right?
Oh,
So before you even enter a trade, you know exactly why you're entering it, what your entry point is, what your exit point is.
right. Like, what are your goals?
Exactly. And also having a stop loss in place.
Okay, can you explain that a little bit, what a stop loss is?
Yeah, so a stop loss is basically like an order that you place with your exchange saying like if the price of this asset falls below this certain level,
Mm-hmm.
automatically sell my position. So it basically limits your downside risk.
So you're not losing everything.
Exactly. Yeah, you're not going to get like completely wiped out.
So you're saying like having a plan, sticking to that plan, and then also using tools like stop losses to manage your risk.
Yeah, exactly.
That's a good way to avoid kind of making these emotional decisions.
Yeah, because when you're in the heat of the moment and you're seeing the price go up and you're like, oh my God, I got to get in, I got to get in.
You're not thinking straight.
You're not thinking straight. Exactly.
Okay, so FOMO is definitely a big one. Um, what are some other like psychological factors that can kind of mess with people's trading?
So another big one is overconfidence, right?
Okay.
So this is when you have a few winning trades in a row and you start to think you're like the next Warren Buffett.
You're invincible.
Yeah, you're like, I can't lose. I'm a trading genius.
And then you make one big mistake and you lose it all.
Exactly. Yeah, you get a little too cocky, you start taking bigger risks, you don't manage your risk as well.
Right.
And then yeah, one bad trade can just wipe you out.
Yeah, I've definitely been there before. I think we all have.
Where you think you got it all figured out and then suddenly the market humbles you very quickly.
Yeah, the market has a way of doing that.
So how do you avoid that? How do you avoid getting overconfident?
So I think one of the best things you can do is just like remember that you're not invincible, right? Like the market is always going to be bigger than you,
Right.
and you're always going to be susceptible to making mistakes.
No matter how good you think you are.
Exactly. So it's important to stay humble, to stay disciplined,
Right.
to stick to your plan, even when you're feeling really confident.
And then on the other side of that, you have like the fear of loss,
Right.
like loss aversion. Like,
Yeah.
I mean, we all hate losing money,
Everyone hates losing money.
but it seems like with
Yeah.
trading, it's almost like amplified, you
Right.
know? Like it hurts even more to lose money in trading.
Yeah, it's like psychologically we're wired to like avoid losses more than we are to seek gains.
Interesting.
It's like an evolutionary thing.
Yeah.
Like back in the day, if you lost all your food, you would die.
Right. So we're kind of programmed to like really avoid those losses.
So how does that manifest in trading? Like, how does that affect people?
So it can make people hold on to losing trades for way too long.
Hoping it'll come back up.
Yeah, hoping it'll come back up, even though like all the signs are pointing to like this is going down further, you know?
Right.
But they're just so afraid of like realizing that loss.
They don't want to sell.
Yeah, they don't want to sell.
And so they just keep holding on, and it keeps going down.
Exactly. And then they end up losing even more money.
Yeah. So that's definitely a trap to avoid.
For sure.
And then another thing that I've heard about is like revenge trading. Have you ever heard of that?
Oh, yeah.
What is that?
So revenge trading is basically when you have a losing trade and then you get like emotional about it.
You get mad at the market.
Yeah, you're like,
Yeah.
the market's out to get me. I'm going to show the market who's boss, you know?
Right.
And then you just like start trading recklessly, trying to like make back your losses.
But it usually doesn't end well.
It usually ends very badly.
Yeah, you end up losing even more money.
So it's like a vicious cycle.
Exactly. Yeah, you get into this like downward spiral.
So how do you break that cycle?
I think one of the best things you can do is just like take a break, right? Like step away from the charts.
Just walk away.
Yeah, just like go for a walk, go do something else, get your mind off of trading.
Yeah, clear your head.
Yeah, and then come back to it when you're feeling more calm and collected.
Right, because if you're trading when you're emotional, you're not going to be making rational decisions.
Exactly.
And then another thing that I wanted to talk about is confirmation bias.
Oh, yeah, that's a big one.
So what is confirmation bias and how does that affect crypto trading?
So confirmation bias is basically our tendency to like seek out information that confirms our existing beliefs, right?
So you only see what you want to see.
Exactly.
Uh-huh.
Yeah, you're looking for information that supports your idea and you're kind of ignoring information that contradicts it.
Right. And this can be a problem in any area of life, but it
Yeah.
seems like it's especially prevalent in crypto. Oh, yeah, because there's so much information out there.
There's so much noise.
Yeah, so much noise, so much hype, so many people with their own agendas.
Right, and everyone's trying to like pump their own coin.
Exactly.
So how do you avoid falling into this trap of confirmation bias?
So I think one of the best things you can do is just like be aware of it, right? Like know that this is a thing that you're susceptible to,
Okay.
and then try to actively seek out information that challenges your beliefs.
So don't just stay in your echo chamber.
Exactly.
Yeah.
Yeah, don't just like hang out with people who agree with you all the time. Like
What?
go out there and talk to people who have different opinions.
Read articles from different sources.
Exactly.
Okay, so we've talked about a lot of like the psychological traps that traders can fall into.
Yeah.
So let's talk a little bit about like some of the solutions. Like how can people overcome these challenges and become better traders?
Okay.
So 1.txt talks a lot about like setting realistic expectations.
Yeah, that's huge.
So what does that mean exactly?
So basically, like a lot of people come into crypto thinking they're going to get rich quick.
Right.
They see all these stories about people making millions of dollars overnight and they think like, oh, that's going to be me.
It's easy money.
Yeah, but the reality is like, that's very rare.
Right.
Most people who get into crypto don't get rich quick.
They lose money.
They lose money, yeah. Or they just like, they don't make the kind of gains that they were hoping for.
So it's important to kind of temper your expectations.
Yeah, exactly. Like come into it with a realistic mindset, you know?
Like what is a realistic expectation?
I mean, it depends on your goals, right? But like,
Yeah.
don't expect to turn like $1,000 into $1 million overnight.
Right.
Like that's just not realistic.
So what is realistic then?
I mean, a realistic expectation would be like, you know, if you're putting in the work, if you're doing your research, if you're managing your risk,
Yeah.
you could potentially make like a decent return on your investment over time.
Okay.
But it's not going to be like a get-rich-quick scheme.
Right. It's going to take time and effort.
Exactly.
And then 1.txt also talks a lot about the importance of having a trading plan.
Yeah. A trading plan is crucial.
So what does that look like?
So basically, a trading plan is just like a document that outlines your trading strategy, right?
Okay.
So it should include things like your entry and exit points, your risk management strategy, your profit targets, your time frames, like all of that stuff.
Well, basically, like before you even enter a trade, you've already thought about like all these different scenarios.
Exactly. Yeah. So you're not just like trading on emotion. You're trading based on a plan.
Right. And that can help you avoid making those impulsive decisions.
Exactly.
Okay. And then another thing that 1.txt emphasizes is risk management.
Oh, yeah. Risk management is huge.
So can you talk a little bit about like what that means and why it's so important?
Yeah. So risk management is basically just like the process of minimizing your losses, right?
Right.
So it's about like protecting your capital, making sure that you don't lose more money than you can afford to lose. Right.
Because you don't want to like blow up your account.
Exactly. Yeah. You want to stay in the game. You want to be able to keep trading.
So what are some like practical tips for managing risk?
So some practical tips would be like, only invest what you can afford to lose.
Great.
Don't put all your eggs in one basket. Like, diversify your portfolio
Right.
and then use stop-loss orders.
Which we talked about before.
Yeah, which we talked about before.
So you're limiting your downside risk.
Exactly.
Okay. And then the last thing that I wanted to touch on is keeping a trading journal.
Oh, yeah. A trading journal is a great tool.
So what is a trading journal and why is it so helpful?
So a trading journal is basically just like a record of your trades, right?
Good.
So you would like write down, what asset you traded when you entered the trade, when you exited the trade, what your profit or loss was, and then also like your thoughts and emotions during the trade.
Interesting.
Yeah. So it's not just about like the numbers, it's also about like the psychology behind the trades.
So it's like a way to kind of like reflect on your trading and see like what you did well, what you could improve on.
Exactly. Yeah. It helps you identify patterns in your trading behavior.
Right.
And it can also help you like become more aware of your emotions.
Right.
So you can start to like control your emotions better and make more rational trading decisions.
So it's almost like a form of therapy.
Yeah, kind of. Yeah.
Okay, well, this has been a really fascinating deep dive into the psychology of crypto trading.
Yeah, it's been great.
I think we've covered a lot of ground today.
We have.
And I think the main takeaway is that, your psychology is just as important as your technical skills when it comes to trading.
Absolutely.
So if you want to be successful in this market, you need to be just as good at managing your emotions as you are at reading charts.
Couldn't agree more.
So thanks for joining me today and for sharing your insights.
Yeah, it's been my pleasure.
And for all of you listening out there, I hope you found this deep dive helpful and informative.
Yeah, keep learning, keep practicing.
And remember, trading is a journey. It's not a destination.
Very true.
So be patient, be disciplined, and don't be afraid to make mistakes.
You're going to learn from them.
Exactly, because that's how you get better.
That's how you grow.
All right, that's all for today's deep dive. We'll